All right, everybody. Hey, hope you are doing well this Monday. It has been an interesting March was a March that we will not soon forget, and I think April is going to be one of the same too. So, guys, hopefully you are having had a great weekend, a safe weekend. Your Monday's off to been a great start, and that your week is going well for you. Hopefully, you're healthy, safe, and calm in this chaotic world right now here. So, I want to thank you for joining me tonight. Promise I will not keep you past an hour. We should be done a little bit before then, actually, but I think you're going to want to take some notes. If anything, make sure to take some notes on some of the things we're going to share with you guys tonight here. So, as always, hey, Jeffrey Wolf, how's it going, buddy? Skinny guy. Hey, I guess it's what happens when you shave 3-4 days of stubble off and you're working out and not eating as much for the most part. So anyway, honored to have you all here. This is your first time to join us here on Note Night in America. Welcome. We do these just about every Monday night. We didn't do one last Monday night because it was a bit of a chaotic time. I was like, let me just see what's going on. But we are recording. I have hit the record button, didn't I? Yes, I did. Recording. They are replayed. You can go to all our videos at WeCloseNotes.tv. They'll take you directly to our YouTube channel. Make sure to subscribe. That's WeCloseNotes.tv. Lots of great stuff. Got some really great interviews on the Note Close Show podcast this week. But you can always catch our videos and all the stuff that we load there. Make sure you subscribe. We've got all these calls are also on Note Night in America podcast as well, plus our Note Closer Show podcast as well. But anyway, getting beyond that, I want to dive straight into the content tonight. I don't know about you guys, but I was very interested come Friday. I get an email forwarded to me from a buddy of mine, a coaching student of mine. He was in Austin last year, right about the same time, and asked me what he thought the market was going to do. And I said, well, I don't have a crystal ball. Who knows what's going to happen with the election? Maybe a pandemic will come in. And sure enough, we've seen a lot of craziness happen. And this is one thing that I've been talking about, how commercial markets, I think, have been over-leveraged for years, overpriced for the most part. And I think we're going to see literally, I don't believe we'll see it. I know we're going to see things like what happened over 12 years ago in 2008. So, but let's dive into it. So I don't know about you guys, but this was the article that was sent to me after a $50 billion in losses, but no one comes to save the mortgage market. This was the article in Bloomberg on Friday. You see, it came out Friday, April 3rd at 12 p.m. Central Standard Time. And I started reading, I was like, oh my gosh. And I've spent the weekend going through this article and pulling up the different companies that it talks about. Literally, over the last March, in all March, worst losses in the commercial mortgage-backed security market out there, literally wiped out decades of profit. And here's a look at the numbers. You can see literally this is taken from Market Group, which tracks that stuff. And you can see it's been going up. It went up a little bit. 2014 was kind of the commercial drop down there. That dropped down again here at beginning of 2016 in the first quarter there. And it's been kind of back, but it's been building up. And look at that drop. Dropped dramatically down a ton out there. And that's what can, if you think about what's going on here with so much stuff being closed and so many people not paying their rent. I mean, you look at big companies like Subway, Mattress Firm, and others are like, we're just not going to pay the rent. All right, we got to stay in business. We got something to help out. We don't know what's going to happen in the market. And, you know, the first thing with them talking about, hey, let's go ahead and everybody qualifies for a 90-day forbearance. Okay, great. That's great. But as I've said before, we've got a long-term issue for a short-term problem. Okay, and this is going to go throughout the year. This stuff is not going to happen overnight here with everybody. But the biggest thing that I want on these calls is hopefully to better prepare all of you that are listening so that you can see the opportunities and you can act on those opportunities. The money's made in an up or down market, whether it's a bull market or bear market, there is opportunity being made. So what are you going to do with that information? Are you going to sit around and say, man, I wish it was 2000. I wish I had gone back to the future, gone back in time and bought a whole lot more. Well, now's the opportunity here in 2020. Yeah, some people say 2020 will be the shittiest year yet for a lot of people. And I think for a lot of people, though, it's going to be a very positive year if you know exactly how to enact on that. So let's talk about some of that stuff. So the article, this is actually an article, you got the same article there as well, Bloomberg. But they talked about how the biggest players out there are losing value. We're not talking 5%, 10%. We're talking huge amounts, like literally losing 88%, 2/3 the CMBS market wiped out. Literally, nobody's trading anything. I've been listening to podcasts. I've been talking to people. No, the mortgage market is at zero right now. Zero. These huge billion-dollar players losing 88, 86, 84, 84, 82, 82, 81%, 77, 76, 74, 74%, 73, 72, 72, 71%. Those represent billions in the market. Billions of the portfolio that's now worth 10 cents on the dollar. Their stuff wiped out in value. Lost value. Now, that's not saying it can't come back if the government comes in, does a big bailout, but can the government really bail out all these people? And it's a mixture. So I didn't have to, I went through a lot of these, but we could be here all night and 2 nights and 3 nights from now going through everything. So what I did is I pulled up the annual reports, the filings on the 3 biggest companies on here, the AG Mortgage Investment Trust, Exantis Capital, and the MFA Financial. I would encourage all of you to do the same thing on more than just 1 or 2 of them. Because let's face it, all these big guys, they've got credit lines, they've got some relationships on Wall Street that are going to help them out some things, but there's a lot of them too that need to move. And there's some players we'll get to, we've talked about in the past, in a few months, on about some things, what's going on in the market, and what do we see. So let's start first out with the biggest loser right now. A whole different thing, AG Mortgage Investment Trust, okay? This, and I pulled up their quarterly report, Q4 report, and this is what they talked about, how they've returned. This is what they're upscaling. This is what they were pitching in Q4 of last year, okay? No, this might be Q3. Q4 looked almost exactly the same, okay? Still going up. Oh, yeah, we're doing great. Even, I'm like, were you really? This is what they're pitching to their investor profile, okay? Now, if you look at their portfolio, Q4 investment portfolio, residential mortgage-backed securities, $2.3 billion, 52.8% of their fair value, okay? Residential investments, $1.49 billion. Commercial investments, just under $600 million, okay? And you can see the breakdown on some of the things there, the residential, the commercial, backed securities, agencies, all this stuff. You can see the percentage of stuff. It's ridiculous, okay? They got so much stuff that's not worth hardly anything now. Now, same thing here. The residential portfolio details, I need some of you guys to be interested. Even the guys, most of these companies are investing in big commercial assets, commercial loans, but they do have the stuff. And I wanted to bring this up. Prime, obviously, and this one brings up $242 million of the portfolio. Alt-A subprime. You see what I'm saying? The Alt-A subprime stuff, 123%, okay? Now, they've only got 8% of the portfolio and 60% in prime. The rest of, look at this, credit risk transfers. 18% of the portfolio. Non-U.S. residential mortgage-backed securities, 4%. Reperforming non-performing loans. Look at that there. 34% of their portfolio has been in reperforming or non-performing loans. Do you think they're going to have more non-performing stuff now? Or reperformers that go default? Yeah. Okay. And then land-related financing makes a small chunk there. But you have to look at that. That's literally what they've got, and that's why they're dropped. Okay. Huge portfolio that now has got stuff. What do we do? Where do we move it? All right. Here's what they broke it down to, is a little bit more in the Q4 on stuff like that. You can see commercial real estate makes up roughly about 26% of their real estate, their loans there. 44% CMBS, and their Freddie Mac case series, 28.5%. Okay. And the thing is that 34% of the commercial loans are at fixed rates, and two-thirds are floating rate coupons. Okay. So that's the thing. If they've got stuff on their portfolio that now, it's going to definitely be non-performing, they got bailed out. Okay. Second biggest player in the field after Exantis Capital, down 86%, second biggest loss. And here's how they broke out their portfolio for a little bit. They're all over the place. But you can see multifamily loans. We know a lot of people are high in multifamily because it's the hottest thing. Well, you know what now? If your renters aren't paying, you're not at the hottest market. 54.7% of portfolios in multifamily loans. Okay. 13.5% by office. Retail, 8.5%. Hotels, 12%. The only really thing that may not go down is the self-storage market. And that's really not quite their lowest thing. But you can see they have Arizona, Nevada, top 2. Okay. 12 and 6%, or actually Texas at 17.8% on Exentis Capital, Florida and Georgia, California, South Carolina, you can tell it's spread out there. But the multifamily funds, the funds that invest heavily in multifamily, when that goes in, if that's not bailed out, it's gonna be a lot of deals available, especially people that thought they were gonna get refinanced out in 3 years. This is what I've been telling people for the last 2 years. You can't count on the money to be there. When the portfolio is dropping, the margin calls in there, nobody's gonna refinance your asset. You've got to come to the table and get refinanced and put cash out. We're going to see that happen again. So everybody that overpaid for multifamily is going to be hurting here by the end of the year. And how many of them have enough cash reserves to float their costs, to float their things? It doesn't matter if they're paying the payments. If the market value drops, the margin calls from these companies are going to be huge. Okay. Here's the thing they talked about. Here's if you invested $100 in January 2018, here's how we've performed. You see Q4 there. That's not the same thing now, okay? And they talked about how they moved their portfolio. Exentis moved it from this, in 2016, they were making a conscious effort to get to where they're at now, being basically 3/4 on their commercial loans and then 25 to 35% on their other CRE investments, okay? Other commercial real estate investments. That could be lending, mezzanine loans, okay? Residential mortgage. That's the thing, guys. There's so many. I mean, don't get me wrong. They've got some big portfolios. Now they're going to be selling those portfolios off big, but they're going to be, at some point, they got to get busted up, sold off in tranches and things like that. If I remember correctly, Exentis actually broke down in their quarterly. I should have saved this, but I didn't in here. They're showing about how the backed securities and how they invest from high to low. And I'll get to that in a second. Here's the third one. MFA Financial, third biggest player to take the biggest kick in the biggest crap last week. And here's literally the first press release. They were supposed to be given a 20-cent per share payout to them, okay? And they said this came out March 23rd, came out 2 weeks ago. And you can read. The company announced that in recent weeks, due to the turmoil in the financial markets resulting from the global pandemic, the company and subsidiaries have received an unusually high number of margin calls from financing counterparties, and have also experienced higher funding costs in respect to its repurchase agreements, meaning they're having to pay more, okay? Is repurchase agreements because they're having to do more due diligence, okay? All right. At the close of business, the company did not meet its margin calls. This was 2 weeks ago, okay? Further on, the company notified its financing counterparts that it does not expect to be in a position to fund the anticipated volume of future margin calls under its financing arrangement in the near term as a result of market disruption, right? The company estimates that as of March 20th, the company's aggregate obligation in its various financing arrangements is approximately $9.5 billion. 9.5 billion, guys. Okay? There is a lot of stuff that's going to be hitting the market. A lot of stuff that's going to take a while to shake out. You should be making hay now, all right? That's what I'm trying to get at. Be making hay, okay? Now, as I went through, that was a press release, and I pulled up their quarterly report, and I pulled up their executive summary. You can see, it literally tells you that's Q4 review on it. So they said, they're excited. In the fourth quarter of 2019, as our whole loan portfolio growth and performance continue to drive our financial results, core earnings basic results that. For the fourth quarter of 2019, MFA acquired just $1.7 billion of assets, including $1.5 billion of whole loans. They bought one big portfolio of $1.5 billion, another $200 million, okay? Our whole loan investment portfolio increased by more than $2.9 billion in 2019 as our strategy of sourcing from select origination partners continues to generate results. Overall portfolio growth exceeded $1 billion for the year 2019. Whoever they're buying from, they just stopped buying, okay? They just stopped buying. If we flip that a little bit further on, fourth quarter investment activity was our highest of the year. Talked about what the new investment for the year with $5.3 billion, including $4.3 billion of residential whole loan. They bought portfolios, okay? Now the thing is that number one, I was like, what's that number one? And I basically clicked, I looked at it further down. In the fine print, number one is they purchased performing loans, our compromise of non-QM loans, fix and flip loans, single family rental loans, and seasoned performing loans. So it's a mixed bag. And I don't necessarily would say performing loans would fall into the non-QM or the fix and flip loans or even single family. They're included along with purchased credit impaired loans. Say subprime, they don't want to say subprime. Credit impaired loans and residential whole loans held at carrying value on our consolidated balance sheet. Right there. Billions. And they can't make the margin calls now. This is the Big Short part deux. Okay? The Big Short part deux. All right? So what does that mean for us? Before I dive into that, anybody have any questions, any comments about that stuff? You can literally just Google those institutions' names and it'll pop to the website and click on their investor profiles or Q4 earnings report. So much great stuff in all 17 of those companies. That's why I was like, I spent all day working on this, as I was like, I can't go through every company, it'd take forever. It's up to you guys to go through that and find opportunities for you guys, okay? Got a couple comments here from somebody. A margin call mean, what does a margin call mean? So, okay, we'll give you an example. So let's say, Sri, you lend me 100 grand, all right, on an asset that's 100 grand. Well, if the value of that asset falls below 100 grand, I have to do one thing. I either have to go out and pledge assets for that difference, or I've got to pay you cash to write that down. So literally, margin call says, okay, the asset is only worth 80 grand now. You've got to bring 20 grand to the table. Most of these companies don't have that extra percentage to bring to the table. Well, they're not going to do it because it's free falling. And these companies are valuing these assets all the time. But most of the time, it's not a big deal in an increasing market. Okay, we're not going to have a margin. But when things start hitting, start ticking, start delaying, start going into defaults, that value drops on an immediate basis, especially in the mortgage-backed securities, because a lot of these institutions are non-bank institutions. They're not like your Chase, or they're not buying Fannie Mae-backed securities. They're buying traditional originated from some other institution. So a margin call is like, oh, hey, the asset's not worth what you lent me. I got to come to the table 20%, or I got to move other assets into that place. Happens all the time, okay? You're not going to be able to buy one-offs in those. Well, how would you find? Here's the thing that I'm trying to get at. You're not, the day of the one-off here, you're going to wait till 12 months before you probably find one-offs, okay? But that's what I'm trying to get at here, everybody. If you can take and what you've got a 6-month time frame to be up and running by the fourth quarter. You got 90 days to see what happens that shakes out to start going together. There's billions of assets out there that aren't going to be qualified for bailouts or something to come in that are going to be sitting there. You've just got to do the work. Okay. So Christy asked a question here. So do these companies hold these loans, and how do we reach out to them and see if they want to sell? Yeah. They're not going to sell one-offs. Most of them are going to be selling in large tranches. We're talking millions, if not hundreds of millions of dollars. Okay. Probably outside of your budget. But what you have to do is start tracking these players, start tracking where they're at, see who they purchased the loan, see who they got signed. So earlier on in the year, we did a webinar talking about, was it the fourth quarter or the first quarter? I can't remember, about how to track assignments of mortgages at different counties and seeing who's going up. So you better bet your ass I'm going back into a couple of counties that we pull and double checking and looking for those institutions or the firms that manage their portfolios for them, okay? So what does that mean for us? Yes, it's going to get bloody if the government doesn't step in. And a lot of people are right now just like, listen, just give me 30 days. Be kind, everybody. Don't be an a-hole. Give everybody 30 days to figure this out, or 60 days to figure this out, okay? And that's why you saw the banks immediately like, oh, we're just going to go to forbearance agreements for 90 days. And someone will automatically go, hey, with that 90 days, if we're still in a crappy place, we're going to extend it 180 days. And then what do you have then? Well, you've got, hopefully people are back to work. Or they've, in some of these agreements, the banks want the borrowers, okay, now that we've delayed 6 months for you, now you're bringing the 6 months to the table. Well, a lot of them sure as hell don't have that, okay? They don't have 3 months of payment. They don't have 6 months of payment. Most people don't have that, okay? What you can do, everybody, here is go to your favorite counties. Pull up in your favorite states and cities that you should be looking at that stuff, okay? So what I recommend starting a vulture fund. I don't call it a vulture fund. I'd start talking to your investors. Start talking to people. Start reaching out. Find out what's going on. Who are they going to sell to? Pay very close attention. Now, it doesn't make sense to start a fund if we don't know what's going to go on. Here's the thing. I don't believe that they're going to get bailed out completely. I think what's going to happen is they're going to incentivize some of these bigger banks and some of these other funds to come in and hopefully buy. That's why in that article, the secondary market was begging for the Fed and others to go in and buy car loans and auto loans and house loans. Go in and buy them up, insure them real fast. Well, that's not going to happen to all of them, okay? So commercial loans, we all know this is going to, They don't have the same type of lending agreements. Okay, some people are going to get evicted out of business. When you look at the big firms, like we talked about before, maybe I've talked about this before, Subway for 20,000 locations, not paying their rent. Mattress Firm, over 2,000 locations, not paying their rent. I guarantee all the Macy's, the JCPenney's, all those guys aren't going to be paying their rent because they can't afford to after a period of time. And God forbid, your tourist areas too. I know that I've got friends that work for Disney and they're like, oh yeah, we're going to pay you pay it for the end of the month, put you on furloughs. What happens if this goes longer than expected? Are they going to file bankruptcy for protection? You have to look at it. The movies are down, tourism is down, the parks are down. What's going to happen to that big stuff? God forbid, Mickey's got to hand money out. We all know residential loans, especially those that have been newly originated in the last 6 months and people don't have the money. Most people can barely get into a house and they have less than 1 month rent. 10% of the market was already roughly close to being a month behind in their mortgage. That number is going to skyrocket, especially if we see unemployment rates rise to 10, 15, 20, 32%, okay? You have to start doing your research now, looking in your markets, looking in your top states, okay? It would be a commercial apocalypse, but the same thing here is we've had the commercial apocalypse happen before. You had the RTC days. You had commercial loans that were a big default. I mean, when I first got into the note business in 2008, that's all I was focusing on, I was buying primarily commercial loans. Now, I didn't buy big 5 million and 10 million, but there was a lot of that smaller crumbs, smaller assets that the banks got off their books, sub-million. Hey, there's some great assets I picked up for less than $1 million, or especially below 5 million. All right. Think about to what some of these companies, and go and look at the 16, 17, 18 firms out there. That represents a huge chunk of the market. That still doesn't mean there are still a tremendous amount of other smaller players out there. What's going to happen in the oil industry? Companies are already starting to file bankruptcy in the oil industry. Smaller players. At the end of the year, was it Rick Perry that said something? You wouldn't be surprised if we emerge from this in 12 months and there's really 5 or 6 big players out there. So opportunities to scoop up some assets. Okay. But more importantly, start doing your research now. Don't sit around and just binge Netflix all day long. Don't sit around and not put a list together. Okay. We've talked about how often, and I've asked this on different webinars and different coaching calls and podcasts, how often are you emailing to your asset managers? Have you built those relationships? I'm so glad we have stuff that's automated. Now, I'm not going to send it out this month because it doesn't do any good to send out this month. They're still waiting and seeing. But next month, if this thing continues through May, they're already extending the stay at home. It was April 30th. Now it's in the middle of May. If it gets through Memorial Day weekend, yes, it will be a catastrophe. Okay. Stan says, hello, I'm Stan. These are the slides that explain your points because you talk so fast. You're hard. Stan, I apologize, bud. You can always go listen to me at half speed if you need to in the podcast there for you. Just that I see things, and we're talking about that in Asia, the world crisis equals opportunity. That's exactly right. Whoever's on anonymous on there, there's opportunity here. And part of what I'm trying to get at here is not to scare you, but literally shake you awake and try to flip you, smack you upside the head, say, hey, here's some opportunity on the other side. In 2008, remember we started this off again. If you could go back, would you buy more in the past? Okay. So start connecting with asset managers, especially start May 1st. Pull a list. If you have not done that before, been through our virtual workshop, you may want to do so. We have a one-day class coming up here in the 25th that you may want to check out. But here's the biggest issues is the smaller companies, the landlords are going to be hit the hardest. All right. The whole mess with the whole paycheck thing that's going on right now, the SBA and Bank of America requiring a credit card or a loan for them to approve your application. Those are stalling tactics so that they can work with the people that they already have a portfolio with. All right. It's a basic thing. Those two things are more valued at banks than just a checking account. Checking account, savings account, they don't give a rat's ass at banks about that. But if you're a lender, you've got a line of credit with them. That's why Bank of America is installing it. Yes, it's a pretty shitty move compared to like Wells Fargo and Chase. A lot of people come in and apply for these SBA loans without having that relationship. But you got to be careful about that. All right. You want to look at assets purchased in 2018, 2019, primarily going to be the ones that are hit the most, okay, because the market did increase quite a bit. Look in the counties, start doing searches on the county clerk for assignment of mortgages, assignments, looking for assets that have closed in the last 2 years, okay? I think this is why Grant Cardone's been, because he bought multifamily assets way above value, almost at the peak of value. Yeah, that works as long as your market keeps going up, but I guarantee the market is not going to. The value of those assets, especially if all the landlords stop paying. Now he's going to come out at fine. None of those assets are going to probably, I guarantee, be personally accountable for. Just move on. But the point I'm trying to get at is look at those assets that have closed, looking at all that stuff, taking note who owns it, who's the bank on that stuff right now, and stay very close because there can be some opportunities. And it's not just on finding assets. You guys need to be marketing. Hopefully you've done the time and do what I've said, okay? So you can sit back and wait and see, or is it going to be back to the future? And I believe it's back to the future. As I was putting this presentation together 2 hours ago, Jamie Dimon came out. You don't know who Jamie Dimon is? He's the CEO of Chase. Biggest or second biggest between him and Citibank. They're going back and forth. He used to be at Citibank back in the day. But anyway, he expects a bad recession and financial strain close to 2008. Now, they say that Chase is set up fine. They're going to continue to lend to their small business owners because they've got a war chest, okay? All right? But he believes that the GPD will be down at least 35%, and you will see unemployment peaking right around Christmas. Ho, ho, ho. Here's your pink slip, okay? So I know it's barely the second quarter, but you got to plan now. You'll be planting your seeds to harvest later on. What would you be doing, okay? And I'm going to get to something else too. Over the last couple of years, I've heard plenty of people complain about Goldman Sachs buying all of these residential mortgages up from Fannie and Freddie and all those stuff. Well, and they were overpaying, all right? They were overpaying because they were getting that dollar for dollar discount against their fine they got from the SEC. How are they going to come out? I guarantee a lot of those individuals at the companies that have bought mortgages and those portfolios from Fannie and Freddie and all them, or the FDIC, are sweating at their books. The books looking, hey, what do we pay for, and what can we dump? What can we get rid of this for? Where we still come out ahead or at even? Okay. Look at your apartment investors. We just talked about this a minute ago. If their big goal, like many apartment, was to, hey, buy an asset, regentrify it, boost the rents, well, that just went out the window. Hey, let's boost the rents and we'll get it regentrified in 2-3 years and cash out. Sorry, ding, ding, ding. That the music's over for that. So storage investors, I think they're going to be good because we saw a boom in 2008 where people moved out, got evicted, and they had to put their stuff somewhere. Same thing. Self-storage, I think, is a smart play. But there's still going to be a lot of stuff that's undervalued in there too because they can't pay their mortgage. They're not paying their mortgage. They're sure as heck not going to pay their self-storage facility. Airbnb or short-term rental vacation owners are going to be hit hard as well. So if you know anybody that's in that neck of the woods, hopefully they've got their booking still going good, but more than likely, if they have cancellations, they're going to have to refund that. So I see a lot of people, I've talked to some friends in Nashville, one of the hottest markets in the country. They're like, we're converting to long-term rentals immediately. All right. Oh, hey, we got a condo project coming on the table, 60 condos. We're not going to turn it into a condo sale. We're going to turn it into an apartment complex for the time being until we get through this for 12 to 24 months. Hotel motels, huge. Hotels, motels, we saw so many of them in 2008, 2009. Why? Because when people don't travel, they don't stay. And so I think we're going to see a wave of hotel and motels as people can't afford to pay their mortgage on that, okay? Commercial office building, I think it's going to be, obviously, it's going to be where the center of the crater is. People not going back to work, people working from home, strip malls, things like that. Those are the opportunities. So start looking in your neighborhood. Start looking around you. Maybe go out to the outskirts of where you're at if you can drive safely without being arrested or anything like that. Look what's available. This is not just talking in your backyard. We're talking every place. Start looking. You see a company on your assignments, see where they're at. Go to their website, see where they're lending. See if they publicize their portfolio. Because you may be able to pick up multiple assets with one contact versus just one, okay? Now, I don't know about you guys, but Stanley Kubrick's Full Metal Jacket movie said it best, all right? Said a Joker, it's a big shit sandwich out there, and we're all going to have to take a bite out of it, all right? And that's what it is right now. It is kind of a shit show, pardon my French, but the market's reeling all upwards. Now, what happens? We get a huge bailout? Okay, great. I just don't think it's going to be big enough to stop it. I think it's going to be the government right now is sticking their fingers in the dike like a little Dutch boy. Spring Link here. And as things move across the country and things going weird, and I wish I had a crystal ball. Should have brought on a psychic. I had a psychic friend. I should have brought her on. Because what she thinks is probably just as close to what I think, and may be different than what you think. Some markets may not be hit hard. All right. I know Alabama may not be hit hard. Go Roll Tide, right? But New York, Florida, Arizona, wherever you're at, be safe. Okay. Ms. Cleo knows exactly. Get her on the phone there. I think CaliforniaPsychics.com, Jeffrey Wolf. CaliforniaPsychics.com. All right. All right. Any questions, comments, concerns from any of you guys out there? She hasn't even cleared her throat yet. That's funny. That's definitely funny. So, yeah, guys, it's in a bit of an uproar, but I did not want to not do a call tonight. Start prepping. Here's the thing. You can't figure out what to do. You're like, what? This sounds like an opportunity. Where do I go? Well, you need to learn first and foremost. We do have an upcoming event, April the 25th. It's our one-day note weekend class. It's all day Saturday, kind of the Cliff Notes version, gives you a good start for you. 9 a.m. to about 4 or 5 p.m. at Central Standard Time is $19. April 25th is the one we're doing here. You get the replays with it. Can't make it. You can go to noteweekend.com and get signed up for it. That's noteweekend.com. Comes with an 18-page manual. We're turning that into an ebook as well, which we'll be giving that out to everybody as well. But it's got links to videos. This is me teaching the entire day on Saturday from basically 9 a.m. to 4 or 5 o'clock in the afternoon with a little bit of break here and there. But that might be something if you need to get your feet wet and want to figure out opportunities, I would recommend you take that. $19 is worth the one day for you, okay? And then when we have our bigger class in May, we're finalizing dates for that depending on what happens. You can attend that, and that $20 or $19 can go towards the cost of that too for you. But I know there's probably some questions here from people. What is the link? Noteweekend.com is the link for you. Literally as it spells, noteweekend.com is the link. $19, guys. It's well worth it for you. Wiley, you love it. Thanks. This helps a lot. It does, especially in your bigger markets that are being hit. You got to look at your foreclosures. See, here's the thing, too, that people aren't talking about. When you have a 6-month forbearance agreement or people get delayed and then it's another 6 months, then you look at the states. Like 6 months from now, okay, we may have foreclosures start to increase here in Texas. Well, 6 months from now may just be the kickoff in Florida that's got a 9 to 12-month foreclosure time frame. So that's going to affect the markets in a variety of reasons, too, on the foreclosure wave. It doesn't all happen in the same way, okay? But I'll tell you this. Most of the banks are going to give people 6 months on the residential side. Commercial side, who knows what's going to happen, okay? Who knows what's going to happen with that? 6 months, 12 months, it's going to be an interesting year, okay? Nathan wants to sign me up. Go to noteweekend.com and get signed up, and you'll have get a Zoom link sent to you, and you'll be good to go there, Nathan. And it's going through. I'll go through a lot of things. You can actually see the schedule on noteweekend.com. I have the schedule as you scroll down for all of you there to take a look at it, okay? Can you be a little transparent on your holds? People, okay? I don't get what you're talking about. Will I have a replay of this? Yes, there's a replay. We always hit replay. If you're on here tonight, if you registered for it, we'll get the email out to all of you tonight for everybody. So, yeah. Somebody wanted me to put the link up there again. Okay. Just go to noteweekend.com. That's the website, noteweekend.com. We will have one in May, weekend after Memorial. So I'm thinking we're going to do our first 3-day class of the year. I'm glad I waited. Probably the middle of May, probably the first or second weekend. Not the first, be the second weekend of May is probably the 3-day class that we're looking at. That'll be a Friday, Saturday, Sunday event. And you go to We Close Notes and sign up for that, or just drop me an email at scott@weclosenotes.com. I guess you don't need to sign up for that, but you might as well go through the Cliff Notes, the Note Weekend first, and then go from there. Okay. Government forbearances doesn't apply to CFDs. No, they don't apply to contract for deeds. Now, if you can get some sort of rental agreement, it all depends on probably on how the state comes out of it. Treat it as a rental or treat it as a regular note. Like if you have a CFD in Florida and you got to foreclose, you may be able to justify that as a mortgage bailout. Whereas if it's an eviction thing, like in Indiana, we're going to evict in 14 days, or other states, like Michigan, where you're going to evict it, it may be more rental agreement. So it's going to play out by state basis on where it's at, okay? Do I feel safe on your personal stuff? So here's the thing. If you've done the things that you need to do, like calling your mortgage bank, calling your credit cards, calling your car company, student loans, call that stuff there. If you've got money in the bank and saved, or if you've got money in your retirement accounts and saved, hey, guess what? If you need to take some money out of your retirement account, you may need to do that. Okay? You know, I don't think we're going to be in too bad a shape personally here. I think we're going to have to tighten our belt like anybody else does. But yeah, I think our personal stuff, value there, we bought the stuff at a big discount when we bought stuff. I haven't bought much stuff in the last 12 months because we were working through our portfolio. So I'm not so much worried about the value depreciating some of those. Yeah, the value's gonna drop on some of those. But you know what? We bought it at roughly 30 cents of as is value and well below 40% of what was owed. So we've got some things. Yeah, deals are taking longer to close. I've had several deals that one was supposed to get closed last week, now got pushed to next week. One that was supposed to close in the first of the month got pushed to the end of the month now. So that's what you have to keep in mind. There's gonna be some delays depending on where that closing is taking place, what's going on in that market. Just be flexible, okay? Just try to remain calm. Don't drink too much. Don't get too stressed out. Laugh a little bit, go for a walk. If you gotta step outside and yell, do so, okay? Questions here? If you need a vent, feel free. You can call me and vent, or go, you can schedule time with Scott, talkwithscottcarson.com. That's talkwithscottcarson.com. Take a break from my schedule, everybody, okay? Any other questions, comments, concerns? I mean, the thing is, if you're in the origination side of the business, I'm sure I've seen this happen across the board, that I've gotten letter after letter and email after email from lenders who have stopped with their origination. They've ceased all origination for 30 to 60 days. So let's figure this out. I've seen assets that were supposed to close, or we're going to get traditional lending, and they've like, oh, we got to wait and reevaluate this. We got to wait and see what happens at the end of the month. All right. So the biggest thing I can tell you here is don't wait around for that. Go out and do other things that you need to do. Okay? Go out and do what you need to do. And the question somebody asked here, KJ Sweet, it's on the 25th is our note weekend class. The 25th, that's a Saturday of this month. So it should be the 25th, I believe. Hang on here, let me pull this up just to make sure it's a Saturday. The replay on that Sunday. Yeah, Saturday the 25th. Okay? Yeah, if you've already taken one of the note weekend classes in January or February or March, don't worry about it. Oh, I think it's just February and March. Don't worry, you can repeat this one coming for free. It's included. Doesn't cost anything extra to repeat on that as well, too. Okay? Couple questions, couple comments here. I'm sure I can speak. I appreciate, I don't know who Anonymous is. You know, guys, we have our ups and downs like anything else. I've got some assets I know I'm going to take it, and that's okay. I just got to realize I keep rolling on. Show up one day at a time, okay? Let's see here. Scott says, have you looked into the next stimulus focused on infrastructure and small business? How do you think that could affect CRE if another $2 trillion is still not enough? Yeah, Scott, look, I don't get into the beforehand. We did a call with my buddy Jason Bird last Wednesday night talking about the PPP plan and the disaster emergency grant that you all should go do. Self-employed or your own businesses, go in and file for that $10,000 disaster emergency grant. Takes about 5 minutes to do, 10 minutes to do if you got to pull your numbers real fast for you, but check into that. Look, if the next stimulus doesn't include rental property or some sort of agreement for commercial, it's going to get a whole lot worse, okay? When is the next note camp? Nathan asked. You know what? I don't know yet. I'm waiting to see. It's probably going to be June, July. Probably June for sure. We have been looking at the calendar, but who knows? It's too early to tell. I will tell you this, it will be online. I just want to know who I need to have in there because we want to keep it up to date. So I'm not really planning. I have a couple of dates outlined for it, just loosely on the calendar. I don't have to worry about a hotel or anything, but we'll be doing it probably June. I won't do it in May. We'll probably do it in June and stuff like that. Okay. If no one is buying notes now, how's the best way to see how things come out and the other when things get back open? So if nobody's buying notes right now, see how things come out. Look, just reach out, talk to people. Hey, what are you selling? What are you buying? What are you selling? What's selling for? Okay, what do you have on your books? Okay, there may be a deal. Look, and that's the thing too, Juliana. You are very creative. You got your bank to finance your purchase. That might be what you need to do in some cases. On some of these smaller players, some of these smaller institutions, smaller deals. Listen, I'll take this off your hands, but I'm gonna need you to finance me. That's a very powerful statement. Okay. Oh, I can take it from non-performing to now a performing like a newly originated one. That's a very valuable thing. Yeah, the bank takes a little bit of haircut, but doesn't take a huge loss, especially if you can work with the borrowers or the property owners to turn the properties over to you and take it on. So that's a strategy I think we're going to see. And I talked about this, I think, 2 weeks ago. We're going to see a lot of subject to deals, see a lot of wraparound mortgages, I think, happen as people can't necessarily sell, but they're still motivated to sell. And still people love assets. People always need a roof over their head. Okay. So guys and gals, that's all I've got for you tonight, unless there's any other questions out there. Once again, noteweekend.com is our one-day class, Saturday, April 25th. The replays are included, so if you can't make it, don't worry. You can watch the replays on that following Sunday or Monday. And like I said, it's only $19. It's just me teaching all day. Would love to have you be a part of it. Trust me, we're going to go some new things. Who knows what's going to happen in the next 3 weeks? I mean, that's the thing. We are T-minus, 18 days out from there. There's going to be a lot of things happening in the next 3 weeks. So get signed up for it, and we'll hopefully be rocking and rolling for you guys. But be safe, everybody out there. Stay diligent. You don't have to leave your house. Don't leave your house unless you got to do some things, but just be safe. That's all I can say. If you need anything, please don't hesitate to reach out. We'll do the best we can, either put you in the right spot or put somebody in touch with you. If you just need a vent, please don't hesitate. Drop me a message. It's good to talk to people. Okay, it's good to connect. And I think I need this as much tonight as maybe some of you guys did, at least getting out and sharing what's going on and be able to vent and see what's going on. So once again, thank you to all of you for joining us here on Note Night in America. And we'll see you all at the top, everybody. Go take some action. Put some marketing into place, okay? Start making some lists. Start working on your website. Start putting your MailChimp together. Start putting your email templates together. Don't wait around until a month from now. Those things that I'm talking about are so valuable. Every day I get on LinkedIn. Every day I get on. Today I harvested another 1,500 special asset managers today on LeadFuse, okay? Trust me, those things are going to come in handy as you get closer and we figure out what the heck is going on here. So be safe, and we'll see you all at the top, everybody. Bye.